Once you start thinking about selling your home, your goal shifts from enjoying your home to looking at your house as an investment property. Finding out how much money you stand to walk away with is your next concern. When calculating how much money you make, one thing that's often overlooked is the seller side closing cost. This video is your guide to understanding seller closing costs in Northern Virginia. We'll walk through all the expenses you can expect to pay when selling your home, and we'll finish with a quick overview of bringing all the costs together. After watching this video, you won't be shocked at the closing table, and you can begin with the end in mind, knowing how much money you will walk away with when selling your home. Let's start by figuring out your home's value. I want you to think of closing costs like an equation. At the top, everything starts with knowing the value of your home. The middle of the equation contains your fees and taxes, and at the end is what you'll walk away with. There are some estimates that are directly related to your home sales price. To predict the sales price of your home, we do what's called a CMA, or comparative market analysis. The process involves comparing your home, the subject property, to similar homes known as comps. Comps are recently sold properties that are of similar size, location, and condition in your community or within a 2-mile radius. Based upon the average of the closed comp sales, a sales price will be selected for your property. The CMA is only as good as the data used to create the analysis. If you plan on meeting with an agent well in advance of selling your home, require your agent to prepare an updated CMA when it's time to go on the market. Since this video is full of numbers, we're going to use a simple property to make it easier to understand. It's located at 123 Main Street, and the CMA says that it is worth $500,000. The mortgage payoff is your most significant expense. The average seller in Northern Virginia has owned their property between 7 to 10 years. Assuming you have a 30-year mortgage, it is likely that you'll have a balance due at the time of your transaction. One question you may have is, do you have to pay off your home equity line of credit, also known as a HELOC, when you sell your home? In most cases, you will need to pay it off at the closing. If you believe you have a different arrangement with your lender, I recommend you checking with them. If you are unaware of the balance of your mortgage or HELOC, here are 3 ways to confirm what you owe. Our example property at 123 Main Street has a mortgage payoff of $300,000. Outside of your mortgage payoff, the next substantial expense will be the real estate brokerage commission. The real estate commission covers the total paid to both the buyer's and seller's agent. The fee you pay is calculated based on the sales price. This is one more reason why it's important to start the process with a comparative market analysis. Real estate agent commission averages around 5.5%. There is no standard or set rate across the board, and real estate commissions are negotiable. Don't let the real estate commission be the only criteria you use to hire an agent. Interview different agents that service your geographic area. Get a list of the services they offer in relation to the commission they charge. Our example property at 123 Main Street has a 5.5% real estate commission. So far, we've covered paying your mortgage company, the real estate agent, and now we're moving to the government. When you purchase your home, you paid recording taxes. Now, as a seller, there are 2 taxes you'll pay at the settlement as part of the real estate transaction. The first tax is called grantor's tax or transfer tax. This is a tax you pay to transfer your property in the Commonwealth of Virginia. To calculate your expected grantor's tax, multiply the expected sales price by 0.1%. To make the math easier, you will pay $1 per $1,000. For our example property on 123 Main Street with a sales price of $500,000, the grantor's tax will be $500. The next tax is called WMATA. It's formerly known as the Congestion Relief Fund. WMATA stands for Washington Metropolitan Area Transit Authority. To calculate your expected WMATA capital fee, multiply the expected sales price by 0.1%. To make the math easier, you will pay $1.50 per $1,000. For our example property on 123 Main Street with a sales price of $500,000, the grantor's tax will be $750. Our second to last category is settlement charges paid to the title company. To give you a brief overview of the settlement charges, 5 title companies were researched in the Northern Virginia area to come up with the price ranges. Despite each title company having different names for each fee, the names were consolidated into 5 categories. Let's start with the settlement fee. This is the highest settlement charge you'll incur from the title company. The title company acts as a middleman to transfer title, make certain all liens are released, and deliver any proceeds after settlement. To get to settlement successfully, the title company may interact with the following parties. With the number of parties I just listed, you can see why making sure that everyone gets paid is no easy task. You can estimate title companies in Northern Virginia to charge between $339 to $725 for settlement fee. The next fee is the deed preparation fee. This fee covers the cost associated with preparing the deed to transfer ownership from the seller to the buyer. As mentioned earlier in Virginia, the seller covers the cost of the deed preparation, while the buyer pays for the deed to be recorded. You can estimate title companies in Northern Virginia to charge between $150 to $195 for the deed preparation fee. The third settlement charge is called document preparation. There are several documents associated with the transfer of real estate, like the ALTA, the deed, mortgage payoff, lien release, 1099s, to name a few. You can estimate title companies in Northern Virginia to charge $250 for the document preparation fee. Title release tracking will ensure that all liens have been successfully released after closing. Assuming you took out a loan to purchase your home, the lender placed a lien on the property to protect their interest, called the deed of trust. After you complete the sale of your property, your lender will be paid from the proceeds of the sale and release the deed of trust from the property. In other words, you and the property are free from the lien held by the lender. The title company will track the lien until it is released. You can estimate title companies in Northern Virginia to charge between $35 to $45 for title release tracking. The wire distribution fee covers the cost to send money anywhere. The fee covers postage and any wire transfers performed by the title company. You can estimate title companies in Northern Virginia to charge between $35 and $45 for the wire and distribution fee. Now that we have covered all the settlement fees, it's easy to see the essential role that title companies play in the real estate transaction. All in all, you can expect to pay anywhere from $600 to $1,000 to the title company. Miscellaneous charges is the name of the following section for good reason. Some of the following charges are not rare, but they are also not always a part of the transaction. Let's cover the two types of miscellaneous fees you may come across, called association fees and charges paid at closing. If your home is located inside an association, you can be guaranteed to pay some fee to the association. The two main types of associations we see in Northern Virginia are homeowners associations and condominium associations. The fee you can guarantee to see is typically tied to the resale disclosure packet. Homeowners of properties located in an association are responsible for providing the buyer with a copy of the resale disclosure. This disclosure typically includes information about the association's finances, rules, regulations, bylaws, and also if the property has any outstanding violations that need to be remedied prior to settlement. Assuming you don't pay an upfront fee, the fee may appear under a number of names. Some services or charges required to sell your home occur after the home is under contract. If these charges are not paid at the time they occur, they are called paid at closing. One of the most common costs you can anticipate paying is the termite inspection fee when the buyer is using a VA loan to purchase your home. Here's a list of other fees or charges you can expect to pay at the closing. Before we put all the numbers and fees together, let's talk about the one place you can expect to receive a credit or cash back. Any charges you paid up front will show up as a credit for unused portions on your settlement statement. You are only responsible for expenses tied to the property while you own the property. Here are some common credits. Let's end this video by calculating the estimated net proceeds to the seller of our fictitious property on 123 Main Street. In our example, the comparative market analysis supported a value of $500,000. If you're ready to calculate your seller side closing costs in Northern Virginia, visit the webpage link in the description. As always, thanks for watching, and I'll see you on the next video. Peace.